The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your your lovable and squeezably soft host on just another excellent day in Florida. In Clearwater. A little cloudy, but every day can't be sunny and 75 and blue. But I have short pants on. How about you? That almost rhymed. I'm gonna have to do that. What if I have no pants on? How about you? That's a little creepy. Anyway, we've got an interesting market out here on expiration day. Really trying to push these highs. Last time I checked, the volume had not come back in, but let's start today on looking what we are at, and we're up 2 points on the S&P cash. The real question is any volume, and the answer for an expiration day should be doing much better than this, especially after yesterday's light volume. Just over 2 billion shares on the consolidated New York Stock Exchange tape as we start the day. There's been a little news on the Ukraine front, but other than that, I can't see a lot driving this market. Probably the most interesting thing is Apple. I addressed that in the Tech Insider today, but we'll look at Apple technically, but I think that there's a reason why. We're going to probably talk about it at length tonight in the Tech Insider Hour on the Tom O'Brien Show. We also have a mystery caller, except it's no mystery. It's Andy Heck. He's going to call in here in just a few minutes. I'll call him his mystery caller. I don't know what he wants to talk about. He did say he wanted to call, though, so maybe it was interesting to see what he's got up his sleeve, and we'll see today. But I had gotten back from watching the NASCAR duels last night. Flew up there, flew back. It's only about 30 minutes. In one of my friend's wonderful little planes. You can fly in right next to it and take the shuttle ride over. And instead of about 3.5 or 4 hour drive, 35 minutes from wheels up to being in the maybe 40 minutes to being in the actual Coliseum of speed. Anyway, it was kind of neat. Got to see some interesting racing. Now deciding whether I want to go through the mayhem that will be Sunday and the Daytona 500. But a little bit tired, so I'm going to have to get some sleep before Sunday if I decide to go back up there. As always, we like to start off with a little bit of history, and today is no different. In 1947, Edwin Land, founder of Polaroid Corporation, demonstrates an instant camera to 650 scientists assembled at the annual meeting of the Optical Society of America. And never before has it been able to develop a snapshot within a single minute. And of course, Polaroid, one of the big stocks of that time frame. And does anybody else know what the big bubble was late in the 50s? I'll let you think about that. There have been bubbles and bubbles and bubbles, but this bubble will probably you wouldn't think of it. I'll give you a little time to think about it. But there was a bubble between 1957 and 1961. It was a gigantic bubble. The stocks soared and then came back to the about 1% of their value, and most of them eventually went out of business. There were one or two of them left, but this was the late 50s bubble that most people have forgotten. And we like to talk about history here because, of course, things repeat in the stock market just like they do in history. Anyway, became one of the big stocks out there. And as always, if you're interested in stock market history, I can refer you to the Jason Zawig's blog, and the link is on Tiger TV if you want to see it. Always, you can email me at path@tfnn.com. If you do so today, I'm not at home. You will not have it. And, well, Andy's here a little early. So why don't we just go to him, because I'm kind of wondering what he wanted to call about, other than me sending him emails at 3 a.m. in the morning after I got back from Daytona. What's up, Andy?
How are you, David?
Good.
Good. You know, I sent you an email earlier today. I don't know if you saw it. I wanted to talk to you a little bit about natural gas.
Could I saw it in half?
That's my Brooklyn accent, buddy.
It is. Okay. You said, no, I did not see any any chart.
So natural gas has claimed its first victim.
Who's that?
Cargill.
Ah.
Cargill lost $100 million in natural gas, and they actually replaced their power trader.
Oh, that's right.
So,
that's actually from yesterday.
Yeah, it's from yesterday, exactly. And I just wanted to say, I think that's going to be the first of a few. I think we're going to see some hedge fund problems there. And, you know, I mean, this was a fast and furious move. And as you know, David, and the listeners know, natural gas takes no prisoners. You know, we blew up an $8 billion hedge fund back, you know, about a decade ago, Amaranth in natural gas.
Yeah.
And if this thing keeps going, certainly the hedge fund community is fighting the upward move. So it's going to remain very interesting here.
It is, and there's been one that has been hitting on my scan every night for Gartley's that I sent you, and I've been watching that very closely. I think a little bit of it hanging around at these levels is on expiration today, and I'm really interested to see how that stock starts acting come Monday after expiration. So I'll be watching a few of those. But I think that there's some, you're looking at some leveraged ETFs. I'm looking at some stocks with options. But I think that there's probably a good case to be made that with the temperature starting to rise again, that the bubble will soon burst in natural gas. You still there, Andy? Guess we've lost him. Huh? Is he gone? I'm assuming he's gone. Probably the NSA got him. That's what I always say. Any truth to that? We've got somebody wildly staring at different monitors, but nothing here that I can see. Oh, he dropped off. Okay. NSA did get Andy probably talking about natural gas. Was probably some kind of NSA conspiracy they'd want. What was the answer? I'm with Xerox copying good. Everybody wants to know what the, I guess everybody is peak D. Everybody in the den wants to know what the big bubble was. It was bowling. I don't know if you knew about it, but it was bowling in the late 57. Everybody thought everybody was going to go bowling every single weekend. And probably about 1947, a gentleman made the automatic pin setter, and for a variety of reasons went to work for somebody else, and later came back. Yeah, it was huge, and that the stocks went absolutely insane in the last 57. Andy's apparently extracted himself from the NSA and them hacking his phone call, and we'll get back to natural gas. What's up, Andy? Are you there? Apparently, Andy has been attacked once again by the NSA and is not back on the phone. We'll wait for him to get... Oh, are you there?
I'm back with you. I'm sorry.
I'm pretty sure the NSA had wrapped you up and put you in a trunk.
Oh, they could be. Could be.
They don't want us letting this information out on the natural gas. It's an international conspiracy.
That's right. But I mean, it's interesting here, certainly. And you were saying something about that leveraged ETFs, and that's when I got cut off.
Okay. Yeah, I was looking at that, and we were talking, I think, a little bit in the den about contagions and contango on those. And I always have to look at those a little bit to see whether they have it. I guess your opinion is that they don't.
Well, I think the DGAS is good to play intraday short-term moves, and this thing is certainly trading 60-cent ranges. Longer term, it's not a good investment.
You mean you're talking about DGAZ, right?
Yes.
Yeah, okay. You said it quick enough that I think a lot of people might have missed it.
No, okay.
Or they could saw it in half.
The other thing I wanted to just bring up quickly, David, before you get on with the rest of your show, is that the sugar market is looking really interesting here. And if you could pull up a sugar chart or a chart on SGG, Sam George George, sugar had a nice move up today, and it's the one soft commodity that hasn't really exploded yet. And I think there's potential for a few reasons. Number one, sugar made an important low at 1470 level earlier, about a month ago. Number two, Brazil is the largest exporter and grower of sugarcane in the world, and they're experiencing some weather conditions, hot, dry, drought conditions, which will affect the crop. Number three, higher oil prices mean more sugarcane-based ethanol in Brazil. And number four, the whole sector's going up. You know, we saw what happened in coffee. We see a long-term bull market in cocoa. And sugar is certainly interesting. And just to add insult to injury, India is experiencing, who's also a large sugar producer, is experiencing some monsoon-type rains, which is affecting their crop. So
when isn't India experiencing monsoon rains?
This is true. But no, it's particularly bad right now. So what's happening here in sugar is that there's been a supply glut in the market, and all the bad news, all the bad, oversupply news is in the market. So any surprises will come on the upside. And technically, this thing has really turned here, has held a long-term bottom, and now, looks like it could really spike higher up to the 20-cent level or higher.
Now, technically, I'm looking at the SGG right now. Technically, it's got excellent support, just under $54. There's a gap there that had some decent volume day with 75,800 contract, or actually, this is shares, I guess, it's an electronically traded note, 75,800 on the 18th. And that's when this thing really started to move. Certainly blew through the high of February 4th. But what that sets up is a level where you would want to buy this on a retrace if you could get it. And that would be about 53.50 to probably 53.80. Might not get that. It's got to a high of 56.70 today. But if you hadn't bought it already, you'd probably want to wait for it and test of that massive gap on the 18th.
Okay, that makes a lot of sense. The other thing, in sugar to keep in mind, there are options on this, and some of the call options are relatively cheap because the historical volatility of sugar hasn't really picked up yet. The historical volatility were about 26%. Historically, volatility can go to 50% in this thing, which really juices the options.
Well, I want to thank you for calling in. We're going to get back.
My pleasure.
We're going to call back to the Power Trading Hour after this brief interruption.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, seeing a little rock and roll going on here. A little bit of country earlier this morning in the market. Now a little bit of rock and roll. And we've got the S&Ps now lower today. This market is acting very much like it did on last expiration cycle. That is taking us all the way up to the highs on light volume and then rolling over and seeing the pullback happen pretty much the week after expiration. 2.17 billion shares on the consolidated tape. So once again, we've gotten to those 1845, 1846 levels on the S&P cash. Light volume and push right back down again, and we'll be checking on those fairly strongly through the rest of the day, but it does look like we've had some movement in the market, and we'll see how it closes. I would not be surprised to see a lot of volatility in the last 30 minutes of today. There's a lot of stocks that have been kind of blow-off toppy, if I could say it that way. Apple, of course, has been very weak, printing off about 526.60, much lower than I suspected it would expire. One of the reasons was yesterday some news coming out about new phones at a thing called Mobile World in Spain next week. They have their big trade show starting on Monday, and yesterday some of the videos for new products started to leak. Some of those products are going to offer features that the iPhone does not have, and I think that they're going to be particularly appealing. I wrote about it in the Tech Insider today, and didn't know just how weak that Apple would get. But I think this is something, and the setup for Apple to at least come back and test that 496 level. We talked about that, 2-3 weeks ago, where that 496 level would be confluence and support, and we've got some high volume down there that has not been tested. I think we're going to see a pretty good chance of seeing 505, 498, and I think probably fairly quickly next week. So there were a few people emailing me about what I thought of Apple, and I thought at best it was going nowhere, and I didn't think the worst, but I think it's we can start moving on to that side. I did tell the guy I didn't like the risk reward. I just didn't understand it. I think he was long at about 530, so he's probably not getting hurt. But I just didn't see hopping on Apple out here for a variety of reasons. Not one of them that I thought was going to be a new smartphone that offered a lot of features that I thought people were going to be interested in. And I think that's part of it. But World Mobile Congress starting on Monday, and that's where all the mobile players get together to impress each other with how flashy a Rolex or other watch that they have. But the movers and shakers and the people that want to act like big shots, it's a lot of that at those trade shows for the most part. Anyway, I was looking at that, and let's just do one more quick look at here. I've been thinking that we could see a close somewhere around 1820. I would not be surprised if we did. The thing that would really be the thing I'm really looking for is a close below 1838 on the S&P cash. That once again would give us yet another sell signal in this market, and I think that it looks to me like they're trying to hold this thing up, but certainly not a lot of volume. Certainly we didn't test it, and kind of like last expiration, it was probably about into 3 o'clock before we really started to see this thing just drip, drip, drip all the way down. But certainly we'll be watching this in the rest of the show. In the meantime, you can give me a call at 877-927-6648, or you can post something in the den. Since I'm not in front of my machine at home, you cannot email me today. That's an N-O-T, cannot. Or you can, but I won't answer until later. So anyway, we're going to start looking at some of these companies that have moved fairly strongly today. First one is a COG, and it beat by a penny. But it's interesting, a gas sale and purchase agreement with another company, and this thing is headed down and on a volume. Cabot Oil and Gas, when we look at this, the November 7th low out here at 31.79, really setting up today. There is a gap. That gap didn't have a lot of volume, so I think you're probably good down to about 32. I think that's where this thing's going to head fairly quickly. Symbol on that is COG for people playing at home without watching Tiger TV. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're under that magic number I was looking for this morning, 1838. We're at 1837.61 on the S&P cash. This is a critical number to come up and close below every time we come back up and test this. And I think we've got a nice push. Do not be surprised if we have a wild action in the last 30 minutes or the last hour of today's trading. I see a lot of stocks that blew off big tops, 2-3% higher to this morning, and they're back flat already, and I think we'll see more of these. But I think today was an excuse to run a lot of the people that were on the edge about staying short. I wrote in my newsletter today that especially the ones where it's the hardest to stay short are normally the biggest moves because, of course, they are the most painful to sit through. And we'll continue looking at that. Anyway, we had a bunch of questions in the den. First was, why does David Einhorn of Greenlight Capital, so please explain why volatility. We'll get to that in a second. See, we got plenty of time here, but we got a lot of questions to get. First question was, Micron Technology, why is David Einhorn so interested in Micron Technology? He bought into it at about $20. And my guess is the reason he was so high on this is it was like 8 days to cover or 9 days to cover on the short side, and I think he just bought a bunch of them, and he's run it probably up here. I think he thought maybe it was easy to run the short side on this one for a while. We've talked about Micron so many times here, but I'll do it quickly. Micron Technology, SanDisk both make memory chips. Those memory chips forever have been a commodity business, the equivalent of being into the airlines and continually going broke. At least in the semiconductor side. They both made money, but for 10 years it's been a bad business to be in. One company went bankrupt, another one caught on fire that was in the same business in China. Micron bought all the assets of Elpida, which was the Japanese firm, and at that point there was nobody to replace them. When the other outfit in China caught fire, suddenly there's pricing power back in it. Now the company that caught on fire in China is back in production, but will not be in full production probably for another couple of weeks. So the worst case is you've got one company that's totally out of that business, Elpida, and you've got another one that's kind of working. But you got basically Micron and SanDisk. I wouldn't be surprised one day to see some kind of legal wranglings on whether or not there was price fixing in this area. But certainly they are making money after about 10 years that they never thought possible. And probably both those areas. I suspect that we probably are going to see more companies. There was an IPO just 2 months ago trying to get into this space. I think we're going to see this once again a crowded area, as these people do not, Micron, SanDisk, do not make chips that aren't standardized. So there isn't any great mystery to the way that they make their product. It is a commodity. It is just a commodity that is in short supply, and why it's gone up. I would not be surprised to see Micron back down at $8 in a couple of years. When that's going to happen is more a factor of how fast that Chinese company gets back to making memory chips. Yeah. Hi. Thank you, Z. Hi, Zinc. Hi. Nix. Hi, Nick. I don't think that's it, but it's close. Hi, Nix. All those those Chinese names, hard to come back for. Okay. Had a question about volatility. I think that's when I was saying I am expecting or will not be surprised to see huge volatility in the last half hour to hour of today's trading. The reason why is, one, we are back below the 1838 level. The secondary one is so many of these charts rolling over intraday. And when I see some of the stocks that I'm short pop real hard early in the morning with no volume and slowly start pulling back, normally I'm smelling a lot of early day manipulation in the marketplace. And the old saying is the open belongs to the retail buyers and the close belongs to the pros. And I think that's what we're looking at here today. No guarantee, but I have a feeling I've looked at enough of these stocks that were much, much higher early, first 30 minutes of the day, and then they really started to come off in the next 30 minutes. That's a good sign that a lot of the street folks have been able to run the stops on those folks early in the morning and basically taking them out of the business. Those guys are probably sobbing, running around somewhere thinking, well, if I would have just hold on another hour. And just too many people probably putting stops too close to what they want to do, but we'll look at more of those. But that's what I'm looking at. One, we're closing below that level, and secondarily, just a ton of stocks that should close lower, and seeing this market roll over on almost no volume today. I'm not surprised that we're closing under 1838. I can't guarantee, but would not be surprised if we close as low as 1820 today. That is a definite possibility. Kind of like a storm. You know in the summertime that conditions are right for a hurricane or a tornado. You cannot guarantee it, but conditions are ripe right now for that, and there's a variety of reasons, but that is it. So that was Micron, Hynix. Do you have an update? I don't know what an update on LVLT was. LVLT. On level 3 communications. Well, they finally gotten some pricing power. I'd bought into this probably around in the 25 areas, kind of gave up on it. It's been doing well as of the last 7 to 10 days, but I have a feeling finally, just like a lot of these companies, they are finally taking a commodity business and moving it higher. I suspected this would have been a long time ago. But they're starting to use some of their dark fiber. But I have a feeling this thing's headed back to $32. I don't know exactly what else they want, but a lot of these companies, like those other ones. Did that answer your question in the Den Z on volatility? I hope it did. Maybe if he's still there. You can give me a call at 877-927-6648. That's 877-927-6648. And I'd appreciate your call. Yes, okay. Now, and the other thing is that options have been pinned at about 1820 on the S&P cash all week. I haven't seen a lot of effort to move that higher. And I didn't see a lot of change in the S&P or the SPY's options this morning. Now maybe there was a change between then and when I drove out here to the office, but I just didn't see a lot of people getting out in front of us. So I could see us gravitating a lot closer to 1820 on the S&P cash than where we're at 1837. So anyway, NEM, I'll get to that. Of course, all these companies are making their way as fast as possible to the cashier to get cash to stay in business. Not surprisingly enough, huge volume down on the 31st on NEM, and we are picking up volume, not heavily down so far on NEM, but certainly we are seeing weakness. They did miss their EPS by 11 cents, 33 cents versus 44, and if you can't make money in gold here, I think I'd have to go home and commit Harry Carey. Maybe the Japanese have that one thing right when you just need to be so embarrassed. But so many of these gold companies just have horrifically bad management. Probably why the gold report from Tom O'Brien is worth its weight in gold. But it's a PDF, so it has no weight. That's a conundrum. We'll have to worry about that later on. Charter off today. Couldn't happen to a worse bunch of guys. CHTR. They were off 5%. We've been talking about these guys for a while. Cord cutters are coming. They've decided to get in and buy Time Warner and some of these other things to go after them. We did go back down to our last high volume low that happened on the 13th of February. They had 9.9 million shares. Not quite that today, but that's why you need to be worried about these high volume lows in the market. Oh, we've got a winner. Chicken dinner, COMM. And CommScope Holding Company, boy, what a rocket ship out here. They beat EPS when they were looking for 30 or 28 cents, made 30 cents, everybody was expecting a lot of bad news out of these guys, pretty much everything, and raised their forward guidance. And probably rolling over a little bit off its highs from the short squeeze, but you might want to take a look at COMM. ISIS is another one out here moving today. IS. Reported positive results from an ongoing open-label multiple dose study. And that is at up 17% today, just at about $60. And earlier today, and it's kind of, this is another one of these things are not holding these highs very well. A few of them are, but this is a lot of what I'm seeing, and that is that huge bounce early in the morning, and not bad on this. But certainly a breakout with volume. If you could get back to about $52 and maybe all the stuff in the biotech continues to do well, that would be it. We were talking in the den last night about Groupon, GRPN. This is one of my walking dead stocks, along with stocks like Radio Shack, Best Buy. Maybe there's more of them, I don't know. I'll have to think about it for a little while. Sears. These things are always perpetually so short. I'd been talking in the den about why Groupon was going to come back down, and they ran it after hours up to $12, took people out fairly quickly, anybody that they could push this out to, and now, of course, down at its lows almost at 807. My comments in the den were always the same, and it is when these companies lose their way, and they are a one-trick pony, as Groupon is. But I've hated this stock since it became public. I've hated it now. I hated it since they got a new CEO. I hate it today. I'll hate it tomorrow. Groupon had a business model that was flawed from the get-go, and that was the ability for other people to do exactly what you do. No patent protection, and really no protection in intellectual property, and no idea. And a lot of people started doing it. I saw some other people in the den talk about how the ads have become cheaper and more coarse over probably the last few months, but it was not surprising to me. I don't think you could have gotten shorts in this stock. I called, and it was not available to me, and normally I can get just about anything. Normally, when it is not available to you, your broker-dealer is probably selling it for a higher fee to somebody else, like another big street name or something. And this, I think, was no different. But I didn't think much of this company before, and it's probably going right back. Now, can they hold these companies out for years like this with false promises, new BS stories, new press releases? They can. And when they find something that's terminally wounded like this, it's bleeding, the business model is broken, that's exactly what they do. And the same thing that you're going to see in BlackBerry. There will always be one more press release that gives people the hope that it's going to go up and continue. Other than trading them, and I mean intraday, you don't want to be in these stocks because it's one press release story out of getting your stock cut in half. Anyway, we've probably spent enough time, since you really can't short Groupon, or at least I can't, GRPN. Maybe someone will call in and said that they were short, but maybe they been short for a while on it. Just check back in the den. I think where's it going? Oh, JCPenney, yeah, another one that's Night of the Living Dead. Not quite dead yet. It's pretty much dead. JCPenney. Probably the most interesting part on JCPenney is just how many malls this thing is going to take out. I suspect they do not make it through the end of the summer. I think that the things are going to rapidly happen on the JCPenney front, and that will be it. But they're moving out of so many malls already. I think the thing is how many of these REITs that are in the mall and retail space are going to get sucked down with them. And a lot of these malls were kind of on the edge already. Them losing a giant anchor like JCPenney probably going to close a great deal more of these malls. In fact, I was over one by University of Florida a couple weekends ago. Just that mall pretty much all gone. Just nothing left. And I'm not going to be surprised if I see anything else. Brutalized, Mike Tyson. Yeah, that's the way it goes. Anyway, we will be back in a minute and catch back up with how this market is doing.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And welcome back to the Meat Locker at TFNN. It's got to be probably a pleasant 62 degrees in the studio today. This is one of the places that the temperature is always either too hot or too cold. There is no just right bowl of oatmeal to ever have out here, but always interesting. But we'll check. Anyway, you can always give me a call at 877-927-6648. We're playing around on that 1838 level on the S&P cash we're at now. And like I said, we want to be watching this thing the last hour, last 30 minutes of the day to see how this really sights up at 2.36 billion shares. This is pretty pathetic. We didn't have volume yesterday. Certainly don't have volume today. And I continue to watch a few other stocks. We'll try to get into that. The one that I think is probably EUO most important right now is that EUO, the U.S. dollar. And it is, I wanted to see this really move and move strongly. Let's see. Yeah, we've got a low that looks pretty good out here at 1690. Came back into it at 1699. We did bounce. We didn't actually touch that low. We did get into the candle low with about half the volume. And certainly volume is not high today as we get back in that. But I think if there was one thing that I was watching today, besides the VIX, it would probably be this EUO. We want to be watching how this thing turns on Monday. I think for the same reason that we are seeing gold up today. What was it up? 1324.70 up nice. It doesn't look like it wants to pull back. I think it might. But as I said, I'd be very wary of a market where gold just continues to pop up $5, $6, $3 a day and just really never gets a pullback in it. This could be the last leg in a bull move and last like this for a year and be very difficult to trade. Normally, if you can identify that last wave in a market, it's best just to go ahead and buy it and grit your teeth and hold it. Silver up 21 cents at 21.80. Platinum up to $10. Anyway, why don't we look at the TLT quickly on this too before, because I think all of these things are at inflection points now that are telling us whether or not these markets are going to do anything. TLT up a little bit today, not a lot of volume either. You'd like this thing to get back down to 105.62. Kind of got close yesterday. Got low of 105.69, so you're about 7 cents off that low. You'd like this thing to continue these low volumes and see, what do you get, 3 million shares today? Certainly some kind of light volume out here, but we could have a market that would be problematic if both these EUO and TLTs start moving. I think it would be a good indication of some problems in the market. And let's see, what are we off here? And we're up 1 on the ES right now. So kind of flipping around here as we go into the last few minutes of the trading day. See if there's any things going on in the market. Nope. That is it. Well, why don't we look at some other stuff here real quick and see if there's anything else. Just wanted to look at Apple. No, not going to have time. Going to look at this, but that is most interesting. I'm going to watch that Monday and Tuesday as that Smarty phone convention gets started in Spain, and we'll be watching it. Catch me in the first hour of the Tom O'Brien Show, normally about 20 minutes after the top of the hour, and about 4:20, 4:25. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.